Soundhound AI has had quite a start of 2024. The stock is up 256% year to date. Remember, I covered this company when it was under $2. Since then, the stock is up 300%. Now, after hours, the stock is currently down 17%, basically missing the estimates when it comes to EPS and revenue as well. And when you're up so much in a matter of 2 months, when you're up because of an investment by NVIDIA, when you're up purely because you're riding the AI hype wave, if you miss and you don't deliver, usually this is what happens. But we're going to dig a little bit deeper. First of all, going into this earnings report, the company had a market cap of $1.9 billion. $1.9 billion and only generating $17 million for this quarter. Now, they did provide some guidance for 24 and 2025, so I want to show you what the current analyst estimates are for fiscal year 24 and 25. Sales of close to $70 million, and for fiscal year 2025, closer to $98 million. So you can see still quite some growth year over year here, over 40%. Now, currently in the next 12 months, EV to sales sits at 30.5 times. Not the cheapest out there at all. The company also acquired a company called Sync3. We're going to talk about that in just a second. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off here with a couple of comments. So they acquired Sync3, establishing Soundhound as the largest voice AI provider for restaurants. Our pace and agility amid this AI revolution has put us ahead of the field when it comes to delivering real commercial value. They say here this was a breakthrough year in which Soundhound rapidly integrated powerful new generative AI capabilities. Our real-world voice AI applications are already live and driving consumer engagement across vehicles, devices, and customer service businesses. I'll pull up the picture on the screen where you can see all of their partners and clients as well. It's pretty remarkable. And so if we look at the Q4 and full year highlights, Q4 revenue was $17.1 million, an increase of 80% year over year, while 80% is pretty remarkable. $17 million just for the quarter barely met their own guidance. Fourth quarter gross margin was 77%, an increase of 6 percentage points year over year. Fourth quarter earnings per share was a net loss of 7 cents compared to a loss of 15 cents, so it improved 53%. As for adjusted EBITDA non-GAAP, that was $3.7 million compared to a negative $18.8 million, so that improved 80%. Full year revenue was $45.9 million, an increase of 47% year over year. So again, full year revenue, $45.9 million, market cap close to $2 billion. You're already seeing here quite a disconnect. Now, we've seen this before. Some companies just increase suddenly their revenue by 50 or 100% year over year, and that's why there is that big disconnect. We're going to see in a second how their own outlook looks like. They say our combined cumulative subscription and bookings backlog customer metric grew to $661 million, up 2x compared to the prior year comparable metric. Now, this is a new metric, by the way, because last quarter we didn't get the subscription part here. And last quarter, this was closer to $330 million or so. So my question here is, how come this is at $661 million when revenue came in at $17 million, full year revenue at $45.9 million? And I'm already going to show you this right now. If we scroll down and we look at the business outlook, if you look at full year 2024 revenue, that's expected to be in the range of $63 to $77 million with a midpoint target of $70 million. Then they even give us outlook for 2025. They say here they expect growth to accelerate with revenue exceeding $100 million. Again, great growth, tremendous growth. But when you look at the backlog, the number given there, I'm definitely missing something. So if someone wants to mention that in the comment section below, please go ahead. They also said here that they're going to achieve positive adjusted EBITDA in their 2025 outlook. Going back up here, they also achieved an annual run rate of around 3.5 billion queries. That's up 50% year over year. The CFO says here, we finished the year strong by accelerating revenue and meaningfully increasing our penetration in the marketplace. We have fortified our balance sheet and taken prudent measures to strengthen our bottom line to ensure we can continue to capitalize on the tremendous customer demand for our AI solutions. Then they go on to talk about the business highlights. Of course, number one here, notable first of its kind revenue contribution in Q4 from a prominent AI chip company. We all know who that is. Then they talk a bit more about some other partnerships and some announcements, customers, etc., etc. But I want to touch on the acquisition of Sync3. Why is this quite a big deal? Well, because it gives them more exposure to these multinational chains. So Sync3 comes with more than 20 national and multinational chains such as Chipotle, Casey's, Applebee's, Panda Express, Papa John's, and Five Guys. Remember, Soundhound, restaurant business, restaurant industry is nothing new for them, but it's quite nice to get that increased exposure with this acquisition. Then looking at their expenses, the expenses actually got reduced by 23% year over year. Operating loss improved 57% year over year. Net loss improved 42% year over year. And adjusted EBITDA, as we've seen before, that improved 80% year over year this quarter. So quite nice, growing top line very, very fast while managing to put those expenses a bit more under control. Which means the number here, net change in cash and cash equivalents, is not that big of a difference from 1 quarter ago. Actually, it barely moved. Now looking at the GAAP net loss and adjusted EBITDA here, non-GAAP, of course, that improved quite nicely year over year. We can also see that stock-based compensation decreased year over year. Very, very important and very nice to see. Moving on here to the graph, as you can see, I'm currently looking here at the weekly. Weekly, of course, extremely overbought. Right now, we are obviously going to get a red candle currently if it stays like this at $6.47. What was pretty remarkable to see is previous resistance, which was around $4, which were rejected back in 2022, 2023 twice. But then here we got rejected for a week. But then that huge green candle hit and went quite fast above that. If we look at the daily right now, of course, also extremely overbought. As you can see, that huge jump here from the announcement of NVIDIA's investment. So a huge gap there. Then we stayed at around $4 or so for a couple of days. And then the stock made that huge jump towards the $6. And now it seems like $7.50 will look like a resistance point, or at least the current pit stop for this high-flying stock. So to conclude, a double miss, small double miss, barely met their own guidance as well. Still tremendous growth for the company, huge potential, but you have to pay the correct price for this business. I don't think that this business is worth $2 billion or close to $2 billion right now. I also have some questions with regards to that backlog. Again, if you know the answers, please do let me know down in the comments below and I'll make sure to pin that comment. Let me know, of course, if you own SoundCloud AI, if now it's on your watch list, if you missed out and you think, yeah, it's too expensive and so I will be looking to buy it a bit lower, or if you have taken profits, that's also no shame in that. Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.